Good afternoon. Hello.
Is it the bottom?
Good afternoon.
Is it on?
Good afternoon.
It doesn't sound like it. Even for me, it's not.
When you tapped it, it went on its own. All right. See it's on. Let me go check the name.
Okay.
Should we sit down?
So they would do that.
I think they're gonna have to, yeah.
Well, that was good.
Yeah.
Thank you for coming.
Yeah, exactly. Get everyone excited.
I just turned it off and turned it back on again. There we go.
Good afternoon.
That's better.
Now it works. Good afternoon, everybody. Thank you for being here in person and on Zoom. What a great event we have here today. Jim Campbell grew up in Lake Forest, and it's so great to have him back here today. One of his best memories growing up was being on the undefeated Lake Forest Country Day School football team in 1969. And even though that is a great claim to fame, what's been going on in his life the last 7 months is truly amazing. Jim, in the spring, his first book came out, and it basically, he has a very compelling subject, the most you know about. It is the biggest Ponzi scheme in history, and it's truly amazing. The architect of that scheme, Bernie Madoff, Jim was able to interview. He died a week before the book came out, and as you can expect, Jim was in high demand at that point. TV stations such as CBS and others were on him to talk about Bernie Madoff, and he was, told them a lot of insights about what Bernie was like. And then just about a week ago, Jim got a Netflix deal. So his Netflix bought the rights to his book. So congratulations, Jim. There will be a docu-series at some point in the future. I'd also like to introduce two people before we begin. One is Melford Campbell, Jim's father. Melford is over here at this table. And some of you may not know that Melford is the longest serving member at Awencia. He has been here for 70 years. He joined the club when Harry Truman was president. That gives you a little perspective. And also Jim's wife, Mary, is here. And now, although Jim has given this presentation many times over the past 7 months, this is the first time Mary has heard it. So we hope she'll be impressed. And she flew in all the way from Connecticut to be here. So thank you, Mary. After Jim's presentation, I'll come up and ask people to ask a few questions, maybe 3 or 4 questions, and then Jim will be available in the blue room that way to sign books. So anyway, Jim, take it away.
Thank you, David, very much. I appreciate it. And Jeff and I, David and I have become like a tag team because I did the casino club.
And he introduced me and everything. And there were 130 people in the circular room. And my hearing is bad. I could not even tell where the questions were coming from because of that. So I look over and this poor guy is writing notes, sweating, trying to get every word of the questions. It's a great honor, by the way, to be back here on Wednesday. Obviously, having grown up here in Lake Forest, and my parents got married here. My sister, Tori, got married here. Dad's been here for 70 years, and he looks great, looks younger than me, which kind of pisses me off. But don't look too closely because that jacket is an old elm jacket. And it's an honor to have my wife here. And I'm obviously a good marketer of books that came out in April, and she hasn't heard me till today. But to be fair, she saw a presentation I gave that C-SPAN showed. And they have a thing on Sunday books on C-SPAN 2, which is authors. And I looked at the whole day, and the only guy I hadn't heard of was me. And I was on at 6 p.m. Eastern, right after President George W. Bush. So I was telling everybody that I'm on right after President Bush, and he is telling everybody he's on right before Jim Campbell. The Bowens have been very nice to me. They got me into Lake Forest Place, which is where Dad stays. So I got a chance, to pitch it to all the folks there, and obviously to Dad. I want to thank Jed for inviting me, Julie for everything she's done to make this happen. My cousin is Johnny Hubbard, who is on the Board of Governors here and runs the golf, whatever you call it. And he can't be here. He's at TCU for his daughter's father's weekend. But he's heard this before too, but he's been very nice about it. I've been able, for some reason, to have a chance at a lot of really nice clubs. I've done Indian Hill on Wednesday. I'm doing Jupiter Island in December. Piping Rock Club in Long Island is coming up. And Riamar, Peter Smith, who's a member here, who I don't know, told my brother that he had listened to the audiobook driving down just yesterday, so he's going to invite me. And you'll notice these are all clubs that I could not get into. I think what you're going to be stunned about is how little people know about this story. And it is a largely untold story in many ways. But let me start off a little bit with where David say. Bernie, I'm driving from the radio station in Greenwich where I do the morning news. I did it regularly once a week, and it's 4:30 in the morning, prep till about 9. So I'm kind of burnt out by the end. And on the way home, I stop at a convenient place and have an energy drink and read the paper. I'm about 100 yards from the entrance, and across my phone comes Bernie Madoff passes away. And the book is now 2 weeks from publication. I got chills. I went up to the gas station, pulled in, and the book is now, so no one knows who the heck we are, the book. My phone starts exploding, text. I was told I was going to be on Bloomberg in 10 minutes, that they'd announced it on their website, and no one had told me. CBS Sunday Morning, which is the #1 show to sell books. You can, after the show ends, you can actually watch on Amazon as it travels. And it went from like 800 and something down to 17 in 2 hours. And they couldn't find me though, because what they do is, if you come on, they ice you. You can do no TV until they're already on. But I wasn't looking at my email, so they went to McGraw-Hill and went over here, and they finally got to me. I said yes. They normally spend 2 months on these things. They came the Wednesday before the Sunday in our backyard, taped 2.5 hours, 5 minutes made it on TV. But they were incredibly nice, and it did a great job for the book. The same day, the New York Post called and said, we want you to write a 2,000 word or any length you want article for tomorrow's paper. And I said, like, how the hell am I supposed to write 2,000 words in between all these interviews? The editor goes, I'm going to tease it on the front page. So that's something that gave me a motive to do it. And I did it. I got out of bed at like 6 in the morning. I went to the mobile app to see if he was being honest. It was on the front page. You couldn't tell from the mobile app the way it's designed, but it was the #1 trending article. I then went to the store, and it was, you'll see it, it's like he had teased it on the front page. And they did a very good job on the way that they put it together. Now the bad news, the book comes out 2 days later, Amazon runs out of books 2 days after that and has no books for several weeks, which really hurt. Now I'll give you a sense of the power of Amazon. 80% of McGraw-Hill's books go through Amazon. Underneath my book, which now said unavailable, and you can search Amazon today and find these books, was a 6-page Cliff Notes type version saying, basically a short analysis of Jim Campbell's Madoff talks, which Amazon is now selling, and my book isn't available. A couple of days after that, underneath, and this one is still on, a book called Madoff Speaks. Sounds like Madoff Talks, doesn't it? I had my marketing person get it. She got the Kindle version, 120 pages blank. And that's what that, you know, and we couldn't do nothing with Amazon, nothing. So one of the things that I tell people is buy books if you can, also from the independent bookstores. The Lake Forest bookstore is very nice. The books you saw downstairs and across the hall after straight ways outside if anybody wants to have the books personalized. But the good news was that before the book was out, 4 production companies came to see if they could buy the documentary rights. And so I had to get, believe it or not, a Hollywood agent at Creative Artists Agency, CAA. And they bypassed the production companies. The way it works is the production company tries to get you to work with them, and then they go to Netflix to get money to produce it, and then it goes. They bypassed them and went right to Netflix. And Netflix bought the rights and has given them the directors, a guy named Joe Berlinger, who's one of the top true crime directors, and he has told me that 144 million people will see this in the first 28 days. So it's pretty. The whole thing has been kind of a mind-blowing experience. Now, how did I get access to the Madoffs? Because they didn't know me from anything. And I was doing my radio show, was interviewing a woman named Lori Sandell, who had written a book that Andrew Madoff and his girlfriend had cooperated with to an extent and forced Ruth Madoff to cooperate. She didn't want to. And Lori out of the blue says, do you want to speak to Andy Madoff off the record as prep for the interview? So I did that. And I attacked him from the minute I got him on the phone. And he was incredibly honest, straightforward. He said, yeah, I should be giving this money back, et cetera. And we talked, and the show was live then. So he said, I'm listening the next morning. And if you're saying what you're saying now, I'm going to trust you. So he listened the next morning, and coincidence number 2 comes up. Ruth Madoff is moving to Old Greenwich, where I live, from Florida. So I said, why don't I take Ruth out to lunch? There's probably not be a lot of people who want to see her. And he sets it up. And Ruth walks in, striking woman. It's the first week in December, freezing cold. There's no one else in the restaurant, but she doesn't take off her sunglasses at first, at least. Sits down, eats a chef salad like she hasn't eaten in a month. She was also incredibly open. We had chemistry up until we walked out, and I said, do you mind if we get a picture together? And she goes, you're wild, aren't you? Thought I'd set her up, but Andy assured her I didn't, so she introduced me to Bernie in prison. And Bernie says, my wife says, and my son says, you're trustworthy. Meanwhile, his son never spoke to Bernie ever again after Bernie confessed. But Bernie said, his son represented that you're a trustworthy guy. So I'm going to talk with you to dispel all the misinformation that's out there. And 400 pages of communications later, I had a book out of it. And a lot of communications and texts and lunches with Ruth. And I got close to Andy Madoff. But I told Bernie, I said, I'm going to vet every single word you said. So you need to understand that. And he said, I accept that. And I'm probably regretted it by the time he was done. The first thing is people assume this was one guy operating behind a curtain in the Lipstick building in Midtown Manhattan. And actually, Ponzi schemes do not last very long, and this lasted for 40 years. And the only way it was able to last is he was enabled by basically the collapse of a system. The first thing is he had some co-conspirators I call the Big Four. Bernie called them the Big Four, actually. These were 4 big investors who bailed him out of cash crisis periodically, and it gave them the right to extort returns. So they got even better fake returns than the normal non-high net worth Madoff victims, the biggest of which, Jeffrey Pickauer, get this, got $7 billion out of the Ponzi scheme. Bernie himself only stole $800 million to pump into his business upstairs. A lot of people don't know Bernie ran a completely 100% legitimate market-making business, executing trades for discount brokers like Charles Schwab. And that business was worth $3 billion at peak without any Ponzi scheme business. And the second group, what I call the willfully blind co-conspirators, was the feeder funds. And these were the folks that funneled money to Bernie. And in return, Bernie passed on the entire hedge fund fees, which is normally 2% of assets and 20% of gains, which is a huge windfall to folks that are just basically sales folks and make under 1%. Under the terms that they could do no due diligence and ask him no questions and tell the SEC exactly what he wanted to tell them. The third group I call the unwitting co-conspirators is the SEC and the regulatory bodies. You'll see later the SEC did 5 separate investigations and not only never uncovered it, they kept reinvestigating for the same, what they thought crime was that he had already been exonerated for. And in fact, it was about the only thing he never did illegally, which was front running, which means jumping right in front of a customer's order because you know how it's going to impact the market. And that's how people thought he was guaranteeing returns, because he knew how the market was going to move, right? If you're my customer, Gene, and you want 500 shares of IBM, right? And I jump right in, so that's going to be plus for the market, right? A little bit. I jump right in and I buy IBM. I'm going to make a little tick right off of Gene Hotchkiss. And by the way, I spoke at Lake Forest College and told him what a great guy you were. Former president of Lake Forest College, right? And he's a great, and a Dartmouth man too, which I went to business school. But you know, he and his school. You did go to Dartmouth.
Undergraduate, yeah.
You're a Dartmouth man. All right, the third, so we've been through the fourth group I call the witless co-conspirators. And Bernie ran his legitimate business on the 19th floor. It looked like a Hollywood set. He was very OCD. Every screen matched up. It was black and silver. You couldn't have any papers on the desk at the end of the day. It was just pristine. 2 floors down on the 17th, behind lock and key that even his sons did not have access to, he had a small group of people who for 40 years basically helped execute the Ponzi scheme without ever figuring out what they were doing, that it was a Ponzi scheme. The most unfathomable thing about Bernie is that you would think, and this is what I thought, okay, he's running a legitimate business. He helped build the NASDAQ. He was the chairman of the NASDAQ. He broke the monopoly of the New York Stock Exchange, ended up the third market share volume. And so you would think, great reputation, something must have happened to make him turn to a Ponzi scheme briefly in his mind. That's how he saw it. It would be, no one would ever know it, get the money back, fix it up and move on. And that's a story he actually told me that he had not told the public. And so then I find out after all this investigation that he basically started the Ponzi scheme side by side by the other business, which means that he was hiring honest, high-techy, he was a technology leader up here, and he was hiring unsophisticated high school graduates who didn't know anything about Wall Street down here, the same guy at the same time out of the same brain. And it's unbelievable. And the other thing that's unbelievable we'll go through is how the system completely, epically failed. What I'm going to do now is show you some slides. There's the New York Post, and you'll see Bernie Madoff's secrets revealed by his prison pen pal. Now, I didn't really want to be called his pen pal. And do you know who the idiot was who came up with that? Me. Because if you look at that thing there, I started off with something along the lines of, never in my mind did I think I would ever be Bernie's pen pal. And they ran with that. But this is what I find amazing. He simply could not accept any losses. Out of all the stuff that I'd written, that's what they put. And this is the thing that's so unbelievable about Bernie. the market making business fit his psyche perfectly, which is he's making money whether the market's up or down on commissions. Okay. And he runs a low cost operation, good people, leading technology. Perfect. He goes over and says, well, I'll manage some money now because I've got some family and friends and they want me to do it. And he suddenly finds, oh, I can lose money on a trade. Hello, that's Wall Street, isn't it? Anyway, he was completely unable to accept any kind of loss ever. So he stopped trading and faked it. That's Ruth Madoff, and that's after one of our lunches. This is one where she let me take a picture, you'll notice. And we met periodically over a couple of years, and you know, she was devastated by all this. Her sons wouldn't talk to her for a while. One son committed suicide 2 years to the day after Bernie was arrested. And Andy died in 2014 of slow moving mantle cell leukemia. He would say to me, Dad killed my brother quickly, he killed me slowly. And she was one tough, resilient lady. She went from having 800 million bucks to driving a beat up car with dents in it in an apartment in Greenwich that was $2,900 a month. And she seemed to have no problem adjusting the life. This is, that's Andy. And Catherine Hooper is his fiance, who is brilliant, got him through it, all of the turmoil. Mark's wife wasn't really able to support him to the same extent. And what always gives me chills about her is she told me that, you know, to Jim, to the depth of my soul, I don't believe Andy knew about this thing. But if you find it, I'll accept it. And she didn't know who I was. They didn't accept, none of the Madoffs did. Basically, Bernie, Ruth, Andy, and Catherine trusted me with their legacies. And none of them saw the book. They had no role in it. And the first they knew anything was on the CBS interview, which they all watched. And by the way, the answer to whether the boys knew was in chapter 8. I don't know which one I'm supposed to be hitting. This is the thing that blew CBS away. On the left is one of the handwritten, it's 7 pages, both sides, exquisite penmanship, Bernie to me, okay, who he doesn't really know, but you know. On the right is the apology letter he wrote to Andy and Catherine on the previous slide. It says, I'm sorry for everything, Dad. Not even love, Dad. And the CBS correspondent couldn't get over that. He would write the stranger 7 pages, basically all kinds of self-justification. All right, how did Madoff fake it? This is a Jim Gorder slide. I don't know, you guys probably know him. He had heard this presentation and he said, well, how did it all flow? So first off, you know, in a Ponzi scheme, there's no real investment activity going on. That's the first thing you've got to find out. And by the way, a Ponzi scheme is extremely easy. Where are the assets? Where's the money? Where's the trading going on? Who are your counterparties? And Madoff's bank, which I'll show you, the infamous 703 account. In that account, there was never more than 5.9 billion. Bernie told me, even though he was allegedly running a $60 billion, $65 billion scheme, and there was never one single dollar of counterparty payment ever. There should have been $4 billion of dividends going through this account because of his equity strategy. There was never $1 of dividend. JP Morgan never figured it out. By the way, this could have been figured out in 5 minutes, what was going on. Bernie himself told me that on a Friday night, he told the SEC that clearing and settlements go through something called the Depository Trust Company, DTC, on Wall Street. And his market maker, you could trace every single of the 500,000 annual trades right through that account. So he told the SEC, I have, and that account was 0646. And he told the SEC that he had an IA investment advisory, which is the Ponzi scheme sub-account there, where all the trades went through it. You call them up, the DTC, go look at the IA sub-account, and you'll see that the Ponzi, it's all right there. And he said he told them on a Friday night, expected to be in handcuffs on Sunday. And the SEC never made the phone call. Okay, so you have to have more money coming in than is going out, which is why they're inevitably fail all the time. And basically, he got money coming in from the big four, and they're the big beneficiaries, the feeder funds. And then he had a whole bunch of individual investors that were with him for 30, 40 years. Many of these were blue collar folks even, who deposited like their IRA type money with them and totally trusted him. He was nicknamed the Jewish T-bill because he never had a loss. They could take their money out any day. Some people took it out on a monthly basis, like a money market account, and they paid taxes on short-term capital gains on what were phony. Okay, so it went into the JP Morgan Chase account, known as the 703 accounts, the last three digits. That's where all the money was, and that's where Bernie basically used it like a family till. He was telling folks he was putting into this complex strategy called the split strike conversion. And I tell you, I never found a victim or even the traders on his legitimate business who understood what it was. And it was conceptually completely simple. It should have mirrored the stock market very closely, like 95%. And Harry Markopoulos, who is the whistleblower you may have heard of, figured out in 2 hours that it was about 5% correlated. And anybody here knows that the stock market does not go up every single month forever. Okay, so now where did the money go once it's in the 703 account? Well, I told you the big four. I called it a reverse Robin Hood. They were taking the money from the less wealthy Madoff victims and giving it to these richer folks. The other part is Bernie laundered money into the back door of his legitimate business when they were having a crash crunch in the overall firm. That's where the 800 million bucks was. And by the way, that $800 million was hidden in trading accounts, the proprietary trading, which is the firm's money, and the market making, which is the trading he did for his customers. It was the losses were hidden in there. The money was put in there to cover up what people thought were trading losses. And the FBI, the Department of Justice, the bankruptcy trustee, all said the kids had to know. So then I did my own separate investigation, and we'll talk about the other failing components of the regulatory scheme, which, all right, this is what an actual Madoff statement looked like that went out every month. This woman was in Chappaqua. Basically, her husband died prematurely. She's an executive with Ogilvy and Mather, and she put all of his pension money and insurance money and her own money with Bernie. In fact, she hand delivered it after he passed away to Bernie, and Bernie said, you know, you don't know me. I'll give you the money back. Don't worry about it. She gave him all the money, and he hugged her. He said, you'll never have to worry again. And she ended up almost losing her house. You'll notice it looks very good, doesn't it? It's got all big cap stocks. It's got a Fidelity market money fund. It's got treasury bills. Everything was very intricate. In these statements were in chronological order trade confirmation tickets, because it was a rapid trading strategy, and every one of them was fake. And Bernie's whole thing was, I am not a hedge fund manager. I am only a trader. I make money on commissions. Okay, that's logic for why he passed on the feeder funds and stuff. In that yellow box there on this phony, that is where the commission goes, and you'll notice it's empty. So he didn't have his hands on top of every item. This thing was so engineered that, for instance, the SEC would come in and want to report, and he would go down the 17th floor and say, we got to make this up, we got to get it done quickly. And it would come out of his computer, and they would put it in the refrigerator so the SEC wouldn't figure out that it was warm and it had just been concocted. All right, this is how Bernie did the money laundering into the legitimate business. The 70, this is an example of 4.3 million bucks, not example, real. And it would go from the Chase 703 account to his personal investment account at Morgan Stanley. After that, it would go to the Bank of New York, what was called the 621 account. That was the account for the market making business that was legitimate. And from there, it went into the back door of the trading P&Ls. This is the infamous Stoop account. which is Yiddish for sexual intercourse, literally meaning to push up. And what this was is you would come in as a client on January 1, and Bernie would tell you you're going to earn, in this case, 18%. Now, first off, have you ever heard an equity strategy that can promise the benchmark? Okay, so the STUP account was the program that allowed them, as you can see right there, year to date, it was at 7.6%. Somehow they had to get that 7.6 to 18 in the final month or two. And so they would then take that, put it into the fake trading, and magically they would come up with 18% by the year end, which meant, by the way, they had to make like 300% in the month of December to go from 11 months at 7 to get up. This on the left is what I mentioned before. This is Harry Markopoulos, the big whistleblower, who took information that was given to him, put it into this spreadsheet. This is the actual spreadsheet, and that under 2 hours figured out that it could not be what it said. And to demonstrate that, on the right chart says Gateway. That is actually a legitimate split strike conversion strategy that's been in existence for decades. It's a fund. And if you look at that, that is what it should look like, right? Which is up and down. The right one is Madoff for the same strategy. And Sterling is the owners of the New York Mets, the Wilpons, who own Sterling Equities, which is a big real estate firm. They had 483 accounts with Madoff, 16 from the Mets. They put deferred contracts into Bernie because Bernie was so predictable. They even borrowed money to buy more Madoff, because if you borrowed it at 7%, Bernie was paying them 21%, about 2 times his normal guys, like call it a double for baseball. This is the ended up being rather infamous. This is the corporate American Express card for BLMIS, which is Bernie's firm's name. And in it, you can't see it closely, but Ruth Madoff that month charged $57,000. There was all kinds of the 17th floor folks, the chief financial officer, other Madoffs, I didn't even know who they were, so they weren't even with the firm, all charging, all of which was paid for out of the 703 account. Now, it didn't mean that Ruth knew it was a Ponzi scheme, but it certainly was a bit of a piggy bank to be charging that kind of money. The funny thing was, is this got into the tabloids, and it started appearing, Ruth Madoff, $57,000 charges all over the world. And I would see these things in a language that only thing I could recognize was 57,000, Ruth Madoff, and Jim Campbell. The rest was in some language, I couldn't read it. Now I took this myself. These are the actual AS400 IBM, Mary works for IBM, AS400s that he ran a $65 billion Ponzi scheme off of. They were obsolete as of the 1980s. And these are the actual machines, which once the FBI turned them back to the forensic investigator, it's a firm called Duff and Phelps, were in a closet there, locked up. So I asked Bruce Dubinsky, who was the forensic lead, who re-engineered the entire trading process, how Bernie did it, if I could see the actual IBM machines. So I had to take that pick. Now, the government managed to miss 2 major conspiracies along with the Ponzi scheme. And this woman, who, by the way, I put the picture of because it's not only is she the biggest international launderer, she looks like Bernie. They look like soulmates, evil soulmates. Anyway, that's Sonia Cohen, ran Bank Medici in Austria, and her feeder fund put $9 billion in. Not one single investigation was done of money laundering, because where she was getting her money was Russian oligarchs, Eastern European oligarchs, Colombian drug lords, who were, let's just say, rather tough characters. I had her phone number because Bernie's secretary gave me every phone number of all of his people. And I was told if I called it, I would be killed. So Mary sometimes encouraged me to call. The other conspiracy that the government never did is this was in many ways a tax fraud scheme, because the wealthy investors, the big four in particular, would have Madoff generate fake losses, right? Which they would use to offset the gains and essentially to commit tax fraud, which is criminal. And not a single feeder fund person has ever gone to jail or been criminally indicted even. All right, here's the regulatory failure. I talked about the SEC, and FINRA is the Financial Industry Regulatory Authority that oversees Wall Street for the SEC. They went 0 for 5 on investigations. Unlike any other CEO, when these examiners would come in, Bernie would only let them talk to him and his right-hand man, Frank DePasquale, who we call the Chief Fraud Perpetuating Officer. And they ran circles. Frank was a high school educated guy from Queens, and they ran circles around the SEC. They couldn't speak to anybody else in the firm. And he put them in a glassed-in office outside of his office on the 19th. He thought about wiretapping the room. He went through their stuff when they weren't there, and he intimidated them. The SEC culture was to try and do as many easy cases as you could, because they were measured by how many cases they got done, and they were all there only to get to Wall Street. They were young lawyers who didn't understand trading markets at all, but they really wanted to get their resumes padded up, and then they would go get corporate legal jobs. So the culture there was not amenable to looking at a complex case that was going to take a long time. Furthermore, and this is one of the things Madoff exploited brilliantly, the SEC was set up in silos. So if you ran a hedge fund or a investment advisory arm, separate examiners would come look at that business, and they're trained to look for Ponzi schemes, among other things. If you run a broker dealer, you get the examiners that he got. And so the SEC never examined the investment advisory Ponzi business in the entire 40 years. They finally got Bernie to register. You're supposed, once you're above a small threshold, you're supposed to register on the ADV form. It's called advisory form. They forced him to do it finally in 2006, 2 years before it went down. They didn't even inspect him after 2006. FINRA was completely in bed with Bernie. Their freshman orientation classes every year of new examiners, they sent to Bernie's office as an example of what a Wall Street firm is like, because it looked like a Hollywood set. And so he wined and dined them, and he was like a Jewish grandfather, very sort of charismatic in a low-key way. And in fact, this was a Jewish affinity crime. 85% of the folks were Jewish. He wiped out a lot of charities. My undergraduate Tufts lost $20 million with him through a feeder fund guy named Ezra Merkin. Now, SIPC is one of the things that flabbergasts me the most. SIPC is the FDIC equivalent for Wall Street. The FDIC, which was set up by FDR for when bank failures happen, and they're funded by premiums from the banks. Since the New Deal, when this was formed, the FDIC has never failed to pay $1 of money that should be returned from bankrupt banks, and has never cost the government 1 cent. SIPC, it's on all your statements, you'll see it, Maryland statements, every SIPC, had $1.6 billion in total in its customer fund. The premiums at the time were $150 a year, whether you were Goldman Sachs or a one-man guy. And the bankruptcy trustee who's appointed will tell you how successful he's been, that he's gotten 70% of the money back. Well, the first thing he did was they didn't recognize the $65 billion. They only recognized the amount of money that was originally invested, which was $19 billion. Now think about that. How'd you like to open your Merrill Lynch statement and wonder if that number is real or not, or that they're only going to recognize the number you invested originally? The second thing is they didn't pay 1 dime out of the SIPC fund to any Madoff victim. So where'd they get the money? Madoff victims that had withdrawn more money than they put in, had their money, were sued to claw it back and give it to Madoff victims who left their money there. So everybody lost their money in the end. So you may not even have had that money left, but they went after you to get money out of because you just happen to have taken out more over time. So assuming you knew nothing about the thing, it was completely unjustified. And basically, these guys were victimized a second time. On Wall Street, obviously the failure of due diligence is what really bothers me. That people give their money to these hedge fund guys, they're assuming that A, they understand the investment strategy, that it's real, that you've documented the returns, and that's what they think they're getting from these guys, right? Because that's what their job is. There is to allocate money across funds that fit your investment risk profile, but they were sending everything to Bernie. Sometimes not even telling them the money was with Bernie. We've gone through JP Morgan 2 months before Madoff went down, and he was desperately trying to get more loans out of JP Morgan. They did not even know after 40 years that was his Ponzi, that was the investment advisor to the United account. They thought it was the market making account. And I use omerta, that's a mafia term for silence. A lot of firms on Wall Street knew that something was up, that it wasn't kosher. They didn't. Merrill Lynch and Goldman, for instance, forbade their folks from doing business with Bernie, but nobody ever turned him in. So what I call for in the book is that the SEC, people think the SEC is a cop, but it's not really a cop. What it is it comes in and cleans up the mess after it happens. And I'd like to see the SEC become more proactive and figure out how to maybe jump in front of things before the train crashes. On FINRA, which Bernie had co-opted, and SIPC, which I just told you about that disaster, their control, they are what's called self-regulatory organizations where the industry is policing itself. And in other words, Wall Street controls SIPC and FINRA, and it doesn't seem to me that that works. But I like the FDIC model because it's not the government that's involved. It's an independent, non-governmental agency. And the FDIC is totally dedicated to the bank customers who lose money. SIPC is dedicated to saving, to actually minimizing anything that has to be paid out. This Hippocratic oath for individual investors, I tell folks that you cannot assume that the SEC, SIPC, Wall Street firms are going to protect you, and that you should not be making investments where you don't know what he's talking about, or whether there's a track record, whether it's doable, and even worse, whether the assets even exist. And at the end, Bernie was offering about 11% returns to investors, which is one of the reasons it survived long, because it didn't look obscene. And these are just the regular investors, not the big four. And the stock market has done 9% compounded for 100 years. So I say, take the index fund and sleep at night. I'll talk briefly about this. I don't know, have you folks heard of Robinhood? It's okay. Their business model is basically to screw their clients. And what do they offer? Free trading. So how do you do free trading? The way you do free trading is they're directing order flow to exchanges who, in return for giving them that order flow, are passing back a small rebate to the firm. So Robinhood's making its money that way. Okay. Guess who started payment for order flow? Bernie Madoff. Guess who never cheated his customers off payment for order flow? Bernie Madoff. Robinhood was so greedy that they were taking such a big rebate. The SEC found that customers would have been better off paying commissions down the street than going through Robinhood. The other thing Robinhood is doing is encouraging unlimited trading. And anybody who knows anything about Wall Street, if you do nothing but trade, you're going to lose. You're going to be it's just like in Las Vegas. And they're going after colleges next. And they're positioning themselves as a democratic populist movement. We're taking on Wall Street. We're beating the big bad hedge funds. They're running up stocks in worst companies like a pump and dump scheme. And they're calling that, that we're liberating the masses. They've been sanctioned by the SEC for basically ripping off their customers. They found that senior management knew they weren't getting good pricing. And by the way, it's required by the SEC that you have a fiduciary responsibility to get your customer the best price that's available. So you can't pocket too much of that rebate. Oops. I want to get right back. I got to show the last slide. So what this comes down to is a morality tale. It sounds like a complex financial engineering crisis, but I dedicated this book to that man over there who gave me the moral foundation that Bernie so sorely lacked. Bernie grew up in a shadow of failure. His father had a bunch of bankruptcies, and obviously he was so out of touch with himself. We would talk about this and he would say, I don't know that it had any impact on me. Maybe it did, you know, and it just shows you. And in this community, by the way, and this place, I took it the Vernon Armors, the Cy Cathcarts, the Jim Gorders, Phil Sweet, who, by the way, would drive Dad to Old Elm to play golf. All these guys, I consider them giants and honest and high moral character, and the mothers too. And so I dedicated the book for Dad because I watched how this person destroyed the lives of so many people, including his own family. But and anyway, the Netflix will be out in a year or so. The director promises me 140 million people will see it, which is about 140 million more books that I'm going to sell. And so it's I hope this has been interesting for you. I hope you'll consider getting the book and then come across. Be happy to sign it. Any kind of questions you want to ask? David's going to.
I'm just going to quickly say,
Thank you.
What a fantastic presentation, Jeff. Second time I've seen it, and it's still riveting.
He stayed awake too.
Hard to believe. So I just want to suggest, Jim mentioned he's a little hard of hearing. So when you ask your question, please speak loudly. And do you want to call on people or should I?
Yeah, go ahead.
Okay. Anyone have some questions? Yes.
I understand why he may have started in a legal and illegal business to see how he got traction. But once he really got a very constructive and remunerative business going, why he didn't shut the other one down? That's the part that logically I just don't understand.
That's a brilliant question, and it deep into Bernie's side. And by the way, I appreciate the Zoom folks that are watching. Bernie, first of all, he saw himself as a people pleaser, and that he felt obligated to get these returns. He would, by the way, he blamed his victims because these guys were greedy. They were pressuring me for returns. It was always more, always be positive. And it was never Bernie's fault directly, but he could not find it in himself to admit any kind of failure or anything that wasn't working. And, you know, he would be fairly forthcoming with me on the Ponzi scheme, but anything else, even if it was an obvious lie of no real consequence, he could not tell the truth about it. And, you know, I tested him out. One thing that was upsetting, particularly to Ruth when she found out, was that he had some affairs. And off the record, to show you how passive aggressive this guy is, he had an affair with Pickauer's wife. And Pickauer was the #1 Big Four and close friends of his and Ruth. He grew to hate Pickauer for obvious reasons. So he could never admit this. He would say, and this is almost delusional, he would take me through that split strike conversion strategy in detail, technically, because he wanted me to understand this was real. And then he would say, now, understand, Jim, I wasn't doing any real trading. It worked, so I wasn't doing it. So yeah, I hope that answered it. But yeah, it's deep. He's not a guy that, there's other folks, by the way, that have trouble accepting losses. You may not want to talk about it. I'm not doing any politics.
What happened to the auditors? Where were auditors?
Auditors?
Yeah.
Ooh, that's a great question. This is another unbelievable thing. The feeder funds all have the Big Four accounting firms, right? Bernie had a one-man accountant in a strip mall in New City, New York, who was invested with Bernie and who was not qualified to do it outside investigations. In fact, JP Morgan, jokingly, the guy became president, said somebody call that number to find out if it's a car wash. And what it actually was a money laundering. And he would come in, all of his tax stamps, his stationery and envelopes were in Bernie's warehouse. And they would come in, this is the extent of this. They had real books, market maker, fake books. They had another set of fake books for the SEC, because remember, you can't be over a certain size, you have to register. So they had fake sets of fake books. Okay, now Bernie's got all these fake profits. He doesn't want to pay taxes on that, right? So there's another set of fake books to deflate everything.
Unbelievable.
Good story, don't you think?
How did the whistleblower get involved in this? Where was he in the whole, you know? when
Like
the
we only hear whistleblowers.
How did he get involved in it? How did he stumble into this?
How did the whistleblower stumble into this?
Oh, that's a good question too. René Thierry Magnon is a French aristocrat who had royal family's money and stuff with Bernie. And a guy named Frank Casey, who worked with Harry Markopoulos, was in his office in New York City trying to pitch their hedge fund. They were going head to head. They didn't know who Bernie Madoff was, but they were inadvertent. They were going head to head to him. And this guy says, "Oh no, I like you, but I've got all my money over here. And this guy's great. And he never loses money. And so he's not even diversified, which is completely crazy. So he says, well, who is this guy? So I'm not allowed to tell you. You're not allowed to, he won't let anybody say anything or he'll take your money right back. So he starts describing it. And he's within 5 minutes, Frank is going, you can't do this. It's not possible. And Renee steps out of the office for a second. There's a piece of paper on the desk of a clerk. He turns it over, Bernard L. Madoff Investment Securities. So that started, he knew something, what he called it is when he knows it's not market generated returns, that's another word for fraud. And then Harry Markopoulos is, we actually found out we share a similar trait. We're both too dumb to quit. And he went after this thing for like 10 times. He thought the SEC, he got paranoid. He thought the SEC was going to assassinate him. They wouldn't listen to him. They thought he was a disgruntled competitor. The real reason they didn't understand a word he was saying. He's a totally brilliant guy. And back then he was very arrogant. If you lost him, if he lost you in a few minutes, he just wrote you off. And they didn't understand him. Silos took over too. The Boston SEC, where Harry was, turned the information in. Bernie was in New York. The Boston SEC did not talk to the New York SEC. So the information did not flow. Washington, they had an analytical arm that did the same work Harry did. Found out in 2 hours, didn't work. That information somehow never got to the examiners on the field. So it's a keystone cops. And if Harry just refused to give up, that's basically what it came down to. He's going to be in the documentary. And Frank Casey will be in it too. He is the greatest storyteller of all time. They actually figured out how to corner Madoff, which is they went into his office and we said, Bernie, we hear you're running money. No, I'm not. I said, we hear it's 10 million. And I remember he's not even disclosed. And they made that number up. And he said, Bernie paused for a full minute and said, I'll admit 7 million. And Frank said, we got him, because his strategy used options to protect the up and down side, okay? It would have required more options, the entire options market, for Bernie's strategy to work. So they basically conned Bernie into revealing to him. The trouble is the SEC didn't act on it.
I think we have time for one more question, maybe two. Tom Ford.
Great speech. Can't wait to read the book. You said none of the big four family, no one involved with the big four went to jail. How much was clawed back from those families?
Okay, say it again.
None
How
of
much
the
was
big-
clawed back from the kids?
Yeah, none of the big four went to jail. How much was clawed back from the families?
Okay, first of all, nobody from the big four went to jail.
Right.
Okay, and in fact, once Bernie died, not a single person's in jail for this. Some of his 17th floor employees, those are the only folks that went to jail. I tell the story of how Bernie managed both. His right-hand woman on the 17th floor was Annette Bongiorno. She was making at the end $700,000 and had a $58 million fake IRA. Eleanor Squilleri was his secretary. She's a hero. She was with Bernie for 30 years. Her salary was $125,000 with no IRA, and they both did the same. Now, on the clawbacks, they got $7 million back from Picower. And the trustee, right, who I just told you about going after clawbacks instead of their fund, he gets money a percentage on every single dollar they get back. And so far, he has billed $2 billion. That includes about 300 million of expense reimbursements. Okay, now Bernie told me that Pickard, his name, Irving Pickard, was going to go after Pickard for 2.5 billion. But Bernie knew he had a ton of money at Goldman Sachs. And basically, Bernie refused the plea bargain for two reasons. One, he wanted everything to go away because he thought Ruth was going to die from the stress. And the second was he felt that he could get more money back by basically extorting backwards the big four. And they did end up giving back $7 billion. Pickard still had at least $2 billion left over. And just to add to the drama, he drowned in his pool about a year after all that happened. Found in Palm Beach.
Wow. Sheila,
Okay, from the Suns, by the way, the Suns fought everything, right? Because Pickard wanted everything. And they basically, after they passed away, the estate, they got about 16.5 million back. But Ruth gave up 100 million and was left with 2.5 million, of which 500,000 of that was for lawyers. And by the way, this is the way Pickard went. She gave up 100 million bucks. It was an audited amount of money, so she had no more money than the 2.5 million. That was to the Department of Justice. Pickard sued her for 144 million.
Sheila, I saw you had your hand up earlier. Did you have a question?
No, I
Oh, you didn't. Okay, I'm sorry.
Anybody else?
Does anyone else have a question? Well, let me,
Please
one
come
more.
by and get the book signed if you want.
One question. As an individual investor, they could have possibly avoided this problem if they had the securities held by an independent person.
That one I couldn't hear.
It seems
Could you speak up just a little bit? Sorry.
But you got a hearing problem?
Well, it seemed to me that the people who were taken could have avoided this if they'd insisted that the securities were held at JP Morgan or someplace else, because you had no way to verify, and you were relying on his own.
One of the biggest parts of this thing was that Bernie would not allow independent custodianship. That is obviously a huge red flag, right? But it did exist. A great friend of mine named Jeff Matthews was a hedge fund manager for 30 years. He had 84 different customers. He's one of the top Buffett experts in the country, so he was always in the paper. He told me that in 25 years of his 84 investors, and only one ever asked him what the strategy even was. He did not have an independent custodian. He said, I could have been putting that money into tomatoes. He had to be totally honest. Bernie, for obvious reasons, wasn't going to allow an independent custodian, and the hedge funds didn't insist on it. I told you the scam that they pulled on Bernie by Frank Casey. Well, they tried another one, which is they call Fairfield Greenwich was the biggest hedge fund, guy out of Greenwich, Connecticut, in fact, our hometown. And they pocketed $1 billion in fees or whatever. So they called it the Fairfield Greenwich and they said, we want to give you $50,000. Now, these firms don't turn down money. And they said, but we want it to go to Goldman Sachs Prime Broker. And Prime Broker manages the custody process and all the operations for hedge funds, and they're independent. And the guy said, no, we can't take your money because he's not going to give the money to Goldman Sachs Prime Brokerage. Thank you very much, everybody, and for coming. Very nice.
Wanted to thank Jim again. What a great talk. And to sum it up, Bernie Madoff had fake books and Jim Campbell has a real book. It's in the blue room now if you'd like to have him sign it. So thanks again. Great event.
All right, well, that's good. I will just end it and hopefully it recorded. All right, very good. We'll end it. Hopefully as soon as I can get it. Oh, Lordy, I hope it worked. I hope it worked. This is excellent. Thank you. I really appreciate it. Oh, you're welcome.
Yes, it's not like all of them, it's not being forever. All of them, it's so different. Like he married into his family. They were about to go into the guy from Europe and South America.